Hey, what's going on, guys? Welcome back to Way Up Trading. Now, today we're going to be going over AMC in a bit of detail. We had a fantastic close this past Friday. Looking at some really good things going for the next couple of weeks. Today we're going to actually break down the chart a little bit. I want to go more in depth. Had a little bit more in depth video for this particular stock, but I think we need to get down to the basics of what we can actually see in the short term and heading into the next couple of weeks and years without some of the fluff. So without further ado, we're going to break down AMC piece by piece to see what we got coming up next after that beautiful close on Friday. And we're going to do all that and more right after this.
Why not use your knowledge of the future to play the stock market? We could make trillions.
Why make trillions when we could make billions?
I'm going to take this thing from the top. I'm going to go and pull up the chart here for the weekly time frame. You guys all remember this chart. You've seen it a million times. You've probably been watching this thing for the last 3 years like a hawk, probably on the 1 minute candles, maybe even worse. But for now, we're actually going to break this thing down at least to get an idea where we are and where I can expect to see us going based on a few different key things. But we're going to start from the basics here. As you can see, we got the chart set up here from the beginning. AMC has been in a waterfall situation here. I have it drawn out in a couple different ways. But we're going to start with the basic overall shapes, because generally you want to look for shapes here in terms of triangles, wedges, things of that nature. When you're looking at a weekly chart, very important to at least get an idea of what your playing grounds are, your supports, your resistance, and what the overall trend looks like. So in this case, we started off with some macro triangles. I'll show you what those look like here from the macro perspective. This is your super macro trend line, super macro downtrend that we've been in obviously since AMC was actually created as a stock, introduced to the market. You have this situation here where it actually just ping pong between two different levels here, bottoms, tops on all-time highs, created obviously a downtrend with bottom retest here. Everything's pointing downwards toward the downside, all the way down to as low as about 35 cents based upon the trajectory. Not saying we're going there. I can understand why somebody like a Rich Greenfield would say something like that, because we could look at the angle, right? But this is also a bearish type of situation, a bearish look. However, this has a reversal style pattern to it. Generally speaking, when you see falling wedges on lower volume, you usually get an opportunity to catch the move back to the upside once volume is drowned all the way out, as it has been for the last several years, months, all that good stuff. So as you can see, this is just one way to look at it. A couple other things here. Let's take a look at the more short-term trend, which is the one we've been dealing with for the last few months. This is the midterm triangle. This is from all-time highs all the way downwards towards the all-time lows, which are roughly around $2.38 pro split, where you actually saw this bounce obviously back towards squeezing. So in this case, we have a couple different tests that we've had. Obviously, the all-time highs was one, Judge Zern, which took place back around July of 2023. The test on the bottom side at the end of September 2023. And then from here, a couple bounces, bounce, and push back up was the squeeze. 3 tests of that bottom trend line, squeeze back upwards. And now we're at the end of the schematic, which is about to break going forward. All right, so this is, again, another one way to look at this thing. And obviously, we could probably put a shorter term triangle here, which is showing us where our potential push out of this thing, which would be a break of a downtrend, which is what we call a breakout, would potentially play out. All right, so we're in a great spot on the chart to start to see this momentum start to change to the opposite side. Now we can also see on the potential breakout, we would have another future type of situation, a future midterm triangle to show, which would basically be what I have marked here, which is once you break out, you start to move back towards levels about $10, about $11 would be the top side of this triangle, to basically retest and re-break back into this higher range. Obviously, specific reason that I have this here, you can see that we have held AMC as at their previous lows, which have been around the $11 mark back in 2020, March 2020, retested 3 times back in 2021 and the end of 2020. That would now be our area of biggest resistance to try to break back up into. And as time moves on, if we start to get the breakout we want to see from this position, we'd start to roll and start playing back within this range, which should typically move pretty quickly back. If we can get back above that level, about $11, a psychological level, about double digits, let's say $10, $11, we should be able to clear this area very quickly back toward about the $25 to $28 range very fast, if we can start to repair the velocity that's been damaged all the way down here within this range where we've obviously been sideways trading for a while, pretty much a long period of time. So this is your average playing field between, again, $10 to $11 to about $80 at the highs. And the overshoots in this area, which I've talked about in the past, if you guys have caught some of the live streams, were the areas where we have a obvious short when you're outside of the general region of trading, right? Outside of those, you have one on the top and another one down here, obviously where we've been trading for the time period so far. So this is basically your areas of reversal. Up here, sorry to say, as a squeeze above this level, above this recent high, it was telling you this was time to sell. Well, most people probably got in, but again, we know better this time around, I'm pretty sure. Most people won't make that mistake. But the opposite is also true. Being in this range below the trading range is the same. Buying should be taking place here if you believe in the stock is possibly reversing, which I do believe is generally it's going to be on the table from this particular breakout. Buying in this situation should be considered to be done in order to start to play back the upside. And that's exactly where we are, in my opinion. We're now in a bullish trajectory. Some of the patterns that we've actually seen on this particular stock, which seem to play themselves over and over again, the descending broadening wedge. And we're going to pull that up here, the general playing field that we're dealing with on the stock. Typically, basically, you're going to have a couple different ones. The broadening wedges and the triangles. This thing makes triangles like nobody's business. I mean, it's designed to fool everybody that's involved in the play, obviously for several reasons that are probably more nefarious than anything else. Trying to take the shares out of people's hands at the lowest prices possible, and there's a lot of manipulation that happens on the stock. I don't need to tell you that. You've been here long enough, I'm sure, or else you probably wouldn't be watching this video. But the idea is to manipulate the stock, push this to a downside move while the institutions are accumulating, buying at lower and lower prices while demoralizing anybody who's holding the share long, who came in at the wrong times, not understanding what they were doing. And they're basically just playing the attrition game, right? Playing the rule of the game of attrition, tire you out, and then when you get least and the most demoralized, which you probably may have been, and most people have been within the sideways trading period for such a period of time, forced to sell. And while they are basically accumulating this thing, ready to buy it back up, exit positions that were short all the way at the top, and basically wound up where we are now at roughly, well, definitely at below all-time lows, okay, which were recent all-time lows before, back in 2020, and we've been trading down here for several, probably almost over a year now, down in this range in the valley, right? So it's pretty crazy to be down here, but nonetheless, the patterns are the patterns. They could basically have repeated themselves a few times. And in this situation, let's talk about this. We have the descending broadening wedge that we're currently in, right? The yellow and purple line. I like to play this particular trend, this type of pattern pretty often on a lot of my shorter trades. And it shows up very clearly and has been showing up very clearly for a long period of time on the stock. And basically what you have is the resistance here at the top end, and you have the low end that shows you support before bouncing back out. Now we have a previous one that actually took place, but I've actually changed this a little bit here, and I'm actually going to call this more of slightly a falling wedge on low volume on the push down, but there are instances where it was also a descending broadening wedge as well. But I just went ahead and moved this here and changed this a little bit because I'm starting to like this as more of a spring type of zone that happened a couple different times. This is more of like a downward sloping accumulation. So there's a few different things that are happening on this particular chart that were odd to begin with. All right, it was odd to begin with, but nonetheless, this range, basically what we did in the more recent time frame was basically retest the areas that have been support in the past. All right, so you have this downtrend that's been happening. You can call it a broadening wedge, you can call it a flag, you can call it whatever you'd like, but a downtrend has basically been retested recently off of the all-time lows and retesting the inside, the bottom end of that flag or that triangle of that support line, the darker support, before pushing back upwards, testing off of the midline, which again, you can see this midline here that has a significance to it. You can see there was obviously been respected a few different times, and then again bouncing off of the top end and breaking back out of this trend line off of the yellow, which also caused a squeeze move outside of the yellow, very similar to as it did back here in this range, right? So volatility happens when you break out of that line. And that's basically what we dealt with. We had another pushback out of the line. Basically, the entire time, the stock has been trying to re-enter this downtrend. So after breaking out of it back here, back in June, January, The stock that wanted nothing more than to go back to where home was. This was basically home base, and they wanted to get back to where home base was based upon its previous trend back in 2020 and before that in the mid 2016s and so on and so on. So it has done that, it has tested it, and now you're basically bouncing right back out. From a straightforward perspective, obviously now you want to start to head back the other way, which I believe you will, and I'll show you why we believe that that's actually going to be the case. So all in all, this is basically the patterns that we've been dealing with on the stock for a little while now, and have a lot of reason to believe that we should be continuing up to start to retest the main playing field where trading has been taking place the most over the last few years. So we're going to move in a little bit tighter on this thing to the more recent day, to basically where we are now on the chart, letting it be known to what we have to expect next. And the reason I'm so excited about what we had as far as the close on Friday is because it is the first time since 2023, July 2023, after the Judge Zern news. This is the first time we have a higher low on a high time frame. Right, this is the higher low that is now being established where buying is taking place, which should confirm a new trajectory on the stock. This is huge, right? It's huge. We were looking for the bounce off of 416, which I believe 418, excuse me, which is the number we talked about. I don't know if you guys are following me on Twitter. If you're not, make sure you follow me there. The link is in my description of this video. But on Twitter, we talked about 404 hitting, 406 hitting. We got 404 as the bottom. So essentially, we call the bottom roughly about a 2-cent miss. But 418, a break back about 418, in my opinion, was going to start to run us back towards about 450 to the 480 range, 490 range, which it's doing just that after we start to see that close above 418 this past Friday, which brought us all the way up to a close of about 436 by the end of the day, which is huge. All right, so in this case, I'll show you a couple different things that are confirming that this is going to be the new trajectory, and they'll get you going with what we were looking like for the next little bit of time. But as you can see, AMC has its areas where things have taken place on certain dates. You guys probably know them as POIs, or points of interest. There's certain dates and certain time frames where the stock seems to move the most, and it takes interest of the interested parties, obviously, like institutions and so on. And we are right in that particular time frame, getting close to earnings, which makes a ton of sense. And we want to kind of get an idea of what things look like going forward. We'll get to all of that in the next few minutes. But to talk about why we actually have some reasons to be excited is because on the 3-day time frame, I mentioned this before on Twitter and also on the live streams that we do every day, but we are in a situation where the stock is now showing buy signals in an uptrend. Okay, this is the entire last couple of years since the end of 2021 has been nothing but downtrends. Yes, we've gotten pops, yes, we've gotten minor squeezes, we've gotten reverses, short term, right? We obviously got the move in March, that March squeeze that we had that ran us all the way back here from the drop of the lows at the time. They were like $9 way back then, but now it's like, I'm just going to show different numbers based upon the reverse split. Two different times where things started to turn around, but ever since really about the end of December 2021, we've been in a downtrend. You can see by all this red selling pressure, but you can see in this area, everything is just showing up green. That means it's green buying strength, which has now changed the trajectory. You obviously had the squeeze that took place in June, in May, June of this year, and we basically now showing that new uprise to the upside, which would turn this whole thing around. Other buy signals that we have, very important to note. We talked about this also on the live stream, but we're going to make sure we point it out now for anybody who may have missed out on that. 3-day buy signal has now given me another show, right? Another specific line right here at about that 418 mark, which goes along with the technical analysis we had done before based on our positioning, right? And it shows 3-day buy signal in this range. Now, just want to point out, this is the first time we've got this in a bullish trajectory ever since back in the 2021 timeframe. All right, very important to note, we have not gotten a bullish buy signal while the stock was in bullish trajectory since 2021. So this is huge. All right, this is a very big thing, and not to mention we talked about a couple different things, including the downtrend break. All right, we're just going to post that real quick just to show what we talked about a minute ago in comparison or in addition to that downtrend. And there you got it. So with the downtrend break, this is that downward macro triangle. You can see a buy signal right here on the downtrend break. We have a couple different touches Judd Zern, the June squeeze, and now. All right, this is huge. This would be a breakout at this location with a 3-day buy signal in the bullish trajectory. This is one of the biggest opportunities on any stock, on the stock at this particular point in time. So just want you guys to be aware that, in my opinion, it's time to turn around. So we're going to give you an idea of what these potential percentages are from this point based upon this new trajectory. As you know, this buy signal, which is pretty cool to see, not to mention another one that's actually pretty interesting. We're also getting 5-day buy signal flashing as well, which is also good to take note of. All right, this is a little bit different. It takes a little more time for this one to develop, but on the 5-day time frame, a buy signal also flashing in the same situation. This is one of the opportunities right now for you to get back in play, or at least get yourself set up, in my opinion, not financial advice, for this thing to turn around in your favor, whether or not you're averaging in, averaging down, or just getting new to the stock from this particular point in time. You should be in a good spot to really get going. All right, not financial advice, you do what you will with that, but I just want to point out the differences in what you can expect based upon past history on what you can expect from a move like this in a new bullish trajectory with a new created higher low. Right, this is what the most important part is: a higher low. Right, you can see it very clearly that the lows are now starting to stack up higher, and higher lows on shorted stocks lead to breakouts and higher prices if they get across certain levels, which we will discuss in a couple minutes here going forward. All right, that downtrend break, and then we're going to talk about the bullish trajectory areas. Again, we have not seen bullish trajectory buy signals on a 3-day, 4-day, 5-day, nothing like that since back in 2021 when everything started. And your average buy signal would have yielded you anywhere between about 40% to as high as 900 to 1,000%. All right, and don't get ahead of ourselves. We have a lot of resistances that have been built in this range. So we're going to talk about those as well, but I just want to point out again the buy signals, and then we're going to start to measure how much we can expect on a breakout with this particular situation. So let's remove this. This, again, visual effect. You have the buy areas, the uptrend in green, obviously red downtrend, which is now showing a new green uptrend. So everything is now changed. So I'm going to remove that for visual effect, and we'll start measuring these areas real quick of the buy signals. Okay, so this is it. And if you want to try those as super trends, is the buy signal that you're seeing here. And here's one 3-day. Obviously, this is the January squeeze, 1,000%. All right, about 1,000, almost, let's say 1,020%. Not that bad. All right, I'm pretty sure everybody would love to see a 1,000% move right now, but let's just keep it what it is. Let's take it level by level. This guy here, 822%, the June squeeze. Now, the other ones outside of this area would have been in a downtrend. All right, these were downtrend. These were in sell-off area, right? So you weren't in a bullish trajectory. You were in a downtrend. But again, in an uptrend, you get really big moves. Also, with a breakout to be also considered, you get a really nice move. All right, back here, we talked about it a minute ago. You had a breakout at that time. Would have been here, right? That yellow line. That was your breakout point. All right, that yielded a breakout. It started from the bottom side. It went pretty quickly, but that breakout point, let's say you played just a breakout, just to give you an example, from breakout to the top was about a 317% move. It probably would have kept going, but obviously they pulled the buy button. What are you gonna do? At the buy button came down, you retested the top side, and you created the June move, which was a continuation of this move. The June move was a continuation of the January move. January was a squeeze. June was a continuation of the squeeze. All right. Now, as far as the idea for the percentages, keep that in mind. The minimum you saw off of the breakout was 300%. And we'll talk about the idea for these other ones in the downtrend we mentioned a few minutes ago. Again, look at the downtrend that was created with the super trends on in the red trajectory to the downside. All right, we're going to measure those now. All those buy signals that would have came in that situation, even with those, about 53%. All right, let's keep going. Let's just go ahead and compare them and so on and so forth. That's the squeeze that took place during, let's actually use a more relative squeeze. We consider to be a squeeze back here. All right, this is the buy signal obviously here. The March move took a little while to get that one going. That was about 51 days since the buy signal, but you had a 159% move. Not that bad. All right, you got the next one. This is the 2022 8 release. A couple of weeks to take that for that to occur. 177% move. Not bad. And the list goes on and on and on. All right, you get these buy signals, you get a uprise, 51%. So let's say on the average, you're getting somewhere about 51% to about 150% move. All right, on the average, even in a downward trajectory. Now, comparing to now, we are in an upward trajectory based upon what we have on the buy signal, the buying pressure that's showing in, and plus the breakout of a downtrend. That's going to be massive. So in my opinion, if we can get above certain levels, which we'll talk about, I mentioned creek lines a lot. You guys may have heard me mention those numbers or creeks, or talk about that on X or on live stream. It's something that is a very, very instrumental part of actually getting these plays to go the direction you like. And there are a lot of them stacked up in the same area that should play out as launch pads if we can actually break through them, especially on this downtrend, which should send us pretty nicely. So let's say, just considering that what I just showed you guys, let's say we had a minimum 40% off of this move down here, right, on the breakout. So let's move in a little bit closer and take a look at what that could potentially be. All right, off of this move from buy signal to where it could potentially go, just based off percentages, nothing crazy. If we did 40% from the low, which is roughly at the buy signal, roughly about 406, a 40% move would land us right here at about, may not be exactly perfect, but about 550. That makes a lot of sense. 550 has been an area we've been dealing with for the last couple of days. We also have to keep in mind we have the debt to equity situation that happens at about $5.66, mentioned by Adam Aaron. I'm not going to get too much into that, but that's supposed to get flipped from debt to equity once you pass that price point. That should also, in my opinion, help this situation out. Let's say we go to the other minimum we saw was roughly about 150, 170% from here. That should land us somewhere around, let's say 150. That should put us roughly about $9. I'd say $9, $10. I'm thinking that's a little bit high because of certain resistances, but we'll talk about those in a minute. But let's say average somewhere in the 8 to 9 range. We've been looking for that number for quite a while. Not saying this is all going to happen, but we do have a couple of different catalysts that are going to lead us in that direction. Obviously, earnings is the first week of November, playing this downtrend, and not to mention all the different resistances that we'll talk about right now that we have to worry about breaking in order to start to see those higher numbers. All right, so the specific time frames we're dealing with, we're trying to break. I just want to have you guys take notice of a couple different areas. Again, I mentioned the creek lines. You probably heard me talk about these in the past on X, on some of the YouTube videos I've done in the past. But basically, this is where we are. We have these specific levels we need to break, and we have a very, very key stack, I want to call this thing, that we need to get through in order to start to see some movement to the upside, which will coincide with the breakout we just talked about on that midterm downtrend, this orange triangle that we've been dealing with for a little while. All right, since Judge Zern and the squeeze in May and so on. But let's get down to nitty gritty. So in terms of what we got here, we already discussed the potential or the higher low that we have currently at this particular point in time. All right, we have a higher low established. So I'm going to go and enter that in just so we can see it visually here, which is this short-term triangle. All right, this is your high low established right now. Fix that a little bit, get that look a little cleaner right here. All right, which should coincide with a breakout. And we can even, let's say if we even add this here, the future triangle as well. We'll leave it as this for now. All right, so we got this whole setup here within this triangle looking to break out from this downtrend. We're going to take a look at the creek lines. Now, these creek lines I mentioned, they operate as bounces in the club, basically getting you to the to the other side of the party. If they accept you in, you're in the other side of the party, you can get to the upside pretty quick. If they reject you, you come down pretty hard as well, or get kicked out of the club in that sense, if you want to look at it from that perspective. All right, so in this situation, we have a couple different creek lines that were broken on very short time frames, which caused a squeeze move, a quote-unquote squeeze move that we got on a very short time frame to bust through where we basically got here now. And these are based on moving averages as time goes on. They move a lot lower as time goes on to the downside. And as you can see, looking really, really close here. All right, this is a break of a few different areas. They happen on every single time frame. You just have to find them and be able to pinpoint them, which is one of the strategies that I use in the platinum strategy. And basically you have the other day we broke a few different ones here. These 425 would have been a 2-minute creek. 30-minute creek was about 427. The 45-minute creek was at 433. Obviously we closed above 433, which was why we pushed up that hard. The smaller the time frames, the less aggressive the move, but you still get a pop regardless. The larger the time frames, the bigger the moves, right? And that's what we really want to be concerned with, is those bigger moves. Pretty sure that's what we're all looking for at this particular point in time. The good thing about this is that you have the higher ones that are actually starting to show themselves. All right, and the ones that we're dealing with are going to be marked here. And I'm just going to put these here for sake of visual effect here. All right, the ones that we're dealing with on a potential breakout. The most important one right now to confirm a breakout of this downtrend is going to be, we mentioned this before, did some buying here back. I entered this on X, letting people know I was going to be buying here. Actually expecting it to hold. It did not hold. We obviously got a little bit lower of a push down towards 404 because it's generally a very strong line of resistance or support depending on where you're coming at it from. And we did lose it, but we now are re-entering it and re-attacking it. So in this case, it's going to be a very tough one to break, but it is the weekly 30 moving average, which is generally where you get big volatility if you can break and hold above those numbers, and also changes the trajectory of the stock longer term. All right, so keep that in mind. Use that. Go ahead and back test that. If you see a stock that's above the 30 moving average, prices moving above the 30 moving average on those longer time frames, like the weekly, the monthly, generally speaking, the stock should continue up in the upward trajectory at that point. So this is going to be one of your first bounces, but it lines up with a couple creeks. So I don't expect this to be easy to break, all right, over the next couple of days. The 30 weekly moving average is at $4.42. All right, that's the recovery zone. I mentioned that in the past as well. The recovery zone that tells you that you're going back to the other direction. We've obviously been going down for several years. We're getting cleanly back above that area. We are going up for the next couple of years. All right, we'll talk about trajectory in a few minutes down the line, but let's start off little by little here. So in this case, you'd actually confirm a breakout of the downtrend, break that trajectory, the new recovery zone back above 442, and then you have a couple creeks you'll be dealing with. The 2-hour creek, specific numbers, you can take notes of this if you'd like. 448, big one, 2-hour creek. The 4-hour creek, 479. The 6-hour creek is at 542. You break all of these, get back above $5, you will see an aggressive move to the upside. That aggressive move should carry all the way up to the 12-hour creek, which is at 732. But this is your main stack. This is going to be a gauntlet of issues we're going to have to deal with. But if we do break out, you best believe with this situation, with that buy signal I showed you a little while ago, you best believe we should get somewhere toward the at least $7.32 mark, which from here, from base, as we talked about with the buy signal that came in, that'd be about an 80% move from here. I expect more. However, you have to deal with another level of resistance, right? We talked about that as well. You may have a downtrend that's going to be created from here, right? Typically, you would get a downtrend you got to deal with, and now you have to probably move back and forth and wave back and forth. The higher the time frame, the tougher it is to break. But once you do break them, the more aggressive the move. So this is the 12-hour creek. That's basically a half a day, obviously. So in this situation, you're probably going to move upwards, something like this. It'll be very volatile, but you'll get the move. Once you start to hold above the 6-hour, you'll push up, probably get rejected at the 738, the 12-hour creek, possibly come down somewhere about halfway before trying to reaccumulate, maybe a quick slice down, push, and then go somewhere toward the $8 mark. That would make sense to me schematically. You may even get a quick loop down a little bit lower, back to like $5. That would be nuts, but possibly is what you'd be looking to expect to happen in this situation. So do keep a lookout for that. But these are my specific marks. Do take notes of them. Keep an eye on them. They may be what you'll probably see in the next little bit. But based upon this breakout with new trajectory, I would like to see us, and I believe we will see this bottom trend line be our new support and trajectory, forming a new trajectory to the upside. And we'll talk about how that looks over the next little bit. And just to get you a little bit more hopium in terms of price ranges, these creeks go all the way up toward about $64.36, which I believe we will see. That's the daily, the weekly, the 3-day time frame, and on the weekly, roughly about $64.36. Take a look at that. Keep note of them. Also, this white line is going to be the monthly 30 EMA. Once again, we talked about that as well, being a very big area of volatility, and that'd be a monthly breakout. Possibility to get back up there. we would see some nice movement if we get up there. Again, don't expect those to break that easily, but those are the areas you're going to have to really be concerned with in this new trajectory. And we'll talk about the trajectory and things like that in just a few. All right, so now we got everything all set here with the idea for where things are, where we are currently, right? We got the little bit of an uptrend we talked about a moment ago. Now we understand that our new trajectory should be to the upside, and after showing the bullish trajectory, the buying stepping in, the buy signals on the 3-day, the 5-day, the super trend situation there, we saw buying pressure looking like we have an upside. We have a breakout to the upside. With all that being said, right, we now have a situation where our trajectory has now changed to a new setup, which is finally looking like we have the move back to the upside that we've all wanted to see. Again, maybe not exactly. Maybe everybody wants to see $1,000. However, it can happen, but it may not be a straight up shot. Don't expect it to be that. But the whole situation is looking like this. All right, we now have a new trajectory that has now been formed off of this new situation here after this breakout of the downtrend I showed you a moment ago on the midterm here. All right, we have this new established uptrend, and this is also going to play off of the descending broadening wedge. All this is in place, and you also have the situation where we had the $10 psychological level, or the multi double digit we talked about earlier. Really basically combining everything to show what things look like. In general, this is going to be our inbound section, right? Previous all-time lows, all right, back here. We tested it, rejected, tested it, rejected, and then we'll get back into this range. Once we start to get back into this range, which should coincide with breaking the downtrend of the descending broadening wedge, right, that yellow line there, just for sake of conversation, that major downtrend that we have been rejected off once, twice, 3 times, halted. You guys all remember haltomania, right? That line, that yellow line, that's a very important line. Breaking that one is the one that will restore our situation here for velocity on the stock, where things will start to move very quickly back to the upside. Now, very quickly is relative. However, that's the situation we basically would be in if we can get back above that line. Our trajectory short term, all right, future movement obviously is going to be this half of this triangle. This orange triangle is now we're going to be starting to play toward the upside. And once we start to break into that level of double digits, we are in a high percentage opportunity to start to break this downtrend. If that downtrend breaks, after breaking the one we initially broke just now, and we get back into double digits, this thing will start to move to $20, $28 quite quickly to back up towards the all-time highs at some point in time. All right, now just taking a look here, this is running a quick Fibonacci retracement on the stock on the monthly time frame. Just taking a look at this from this perspective. You can take a look at it from the all-time highs, which is going to be considered a swing high, to the swing low, which is the all-time lows. Will give us some Fibonacci locations and areas we need to be most concerned with to break back above, and most likely our targets. All right, in this situation, obviously, we mentioned a few minutes ago that $28 was one of the areas that's going to show up as one of the areas that should hit pretty quickly after you recover this entire candle that took place after the Judge Zern news. That should recover quickly. That's going to be at the 0.5, which roughly lines up about $29.79, somewhere in that range. I said about $28 a minute ago. $29.79 comes up with this particular type of Fibonacci retracement. And ultimately looking for that golden pocket to hit. This is generally going to be between the 0.65 and 0.618 is the golden pocket, with a high potential touch of the 707, right? 707, we mentioned that a few minutes ago, also that $80 range. Generally be the area we'd probably start to see at some point in time near in the future. Could take a few months, could take a couple of weeks, could take a year or two. All right, just expect at some point in time we will touch that 707 area, which would be the top of that playing range that we talked about before, the playing field, right? That area. We'll draw those in just to kind of show you again how those all lines up. But just want to at least make sure we touch the Fibonacci idea and see where things line up price-wise. You can also do a Fibonacci extension just to get an idea where you potentially go using the same concept. But again, this would add in a trend-based idea based upon how the trend is looking now with a new uprise in the price. All right, so we got to keep that in mind. But let's take a look at that perspective, which is now a trend-based fib. Swing high, swing low, the low to the high to the low. Similar situation, about $28 shows you here. $28 would be about the 0.65, well, 27.17, 707 is around $33. So again, that general area should be where we probably wind up first, right? When we'll be recovering this entire move. Makes a ton of sense. That's basically recovering this entire situation that happened after the Judge Zern verdict, or whatever you want to call it, and basically getting back into that range is most likely going to happen once we start to break over the 382, which is that area we talked about, double digits, $10, $11. Once you're clear of that, watch out for us to head back to that level, and things should start to look pretty sweet from that point forward. All right, but we're going to line these up here with the trajectory we showed a minute ago, just to give you an idea what those all look like. And so it actually makes some sense from a schematic point of view. So let's go and do that. This is the inbounds area we talked a little while ago. All right, it's just this white line, roughly about $11. Lined up with those fibs. This dotted line lines up with the golden pocket, as you can see, about $28.50 in that range, probably about the middle of the golden pocket. And then again, that $80 range lines up here. The one is up here at the $100 range. And lo and behold, again, this is something we want to keep in mind. It's not impossible to get up here. It won't happen in one shot. But typically, a 1618 is possible to see. All right, and it just happens to be that number is at $1,023. Just all right, we want to make sure that we at least look at everything, not what we wanted to see, but we're looking at what the charts potentially say, utilize some of the tools that are at our disposal, and look at it from that perspective. That can potentially happen if we decide to visit all-time highs, like I mentioned, is possible. But if you've been doing what you need to do down in this range, you should be whole by the time we get up there, and probably be in the process of being profitable, and then some if we get back into these ranges in some point in the future. We'll look at how it looks time-wise, but let's first line this whole thing up here with the long-term trajectory we talked about a few minutes ago. You see how these all line up. We'll look at the downtrend, right, the descending broadening wedge break that we could potentially see roughly around that $10, $11 mark, which is the one that we've been halted on every single time we've touched it. Again, getting back into this range, $28 and so on, until we reach above that $80 mark, which is just about the top of this triangle. Lines up with the point with the one, which is basically where everything started on this trajectory, and ultimately 148, all right, which would be the top side of the original area where AMC started, where it double top before falling all the way down to its low areas. All right, that would basically be where everything started. Now, can you overshoot again? You can. All right, but again, I would caution, if we do start to get into those ranges, you need to be careful because of the fact that we've already gone through this before. You probably don't want to go through this again. All right, so just keep in mind that was an overshoot at that point. Okay, can you get overshoots again? Yes, you can. When you overshoot on one side, you typically overshoot on the other side. Can it happen one more time? Absolutely. You wind up in this range again, and they may start the process over again, or we'll hit a higher high, and then they start the process over again. So something to keep in mind in the future. All right, so just keep those in mind. But again, this is our new trajectory based upon the uptrend that we're starting to form, with a potential break of the descending broadening wedge, and then playing those key levels: $28, $40, $80, and then potentially $150, with the possibility of a break to the upside for new all-time highs, or revisit all-time highs to new all-time highs over the next several months to several, possibly a few years. All right, so do keep that in mind. If it's price acceptance, if it's a slow and steady grind rather than a straight shot up. Straight shot ups generally tend to get shorted right back down the hill, so we don't want that. I'd rather get price acceptance. And the stock has been beat down pretty well, right? We know that already. But and obviously looking at other stocks in the market, such as CNK or Sanimark, IMAX, and so on. These things are moving in the way they should, the regular fashion that they should. And so far, it looks pretty good for them, meaning that we should, in this situation, as debt is going away, things are getting better fundamentally for the company, it would make sense for it to finally start to turn around. But for some reason, this company or the stock seems to defy gravity. Hopefully things start to change based upon what the chart is now saying. All right, so the next question that usually comes up in situations like this is when? Like when are we going to see this? When is this going to happen? Well, I mean, based upon what we have here, again, you gotta keep in mind that this can be a time frame that's going to take a while to actually come to fruition. But if we looked at it from just where the actual triangles end up, this looks like it could take roughly about 2028 for us to actually see that. I don't think it will take that long for us to hit those numbers. It's possible, based upon what we have here. However, I do think once we start to repair that velocity above $10, we can shorten that time frame pretty drastically. Probably to about a year or a year and a half at most from now. That's what I think. In terms of for us to start to see the moves above the $10 range at least, well, I'm going to look at the past situation, and we're going to use the concept of points of interest, right? Your points of interest going to thrown around pretty often nowadays, and basically these are all the areas that are marked off based on time, how volatility seems to kick in for buyers to step in, and you get these large squeeze moves or push ups. All right, and based on time, our next time frame, we're actually in one right now as we speak, roughly between the October 9th date and roughly about the first week or so of November, where we are right here. All right, so roughly about earnings, we should probably be exiting out, and hopefully that should be what takes us a little bit higher into the next locations, next price points, and all of that good stuff there that we all want to see. But however, from there, our next time frames, we actually have the new movement happening, would line up in a couple different areas, and I'm going to make sure we got our different triangles that would confirm that. All right, so just taking a look here. We talked about our triangles. I'll remove a few of these just so that they're clear. Get rid of our midterm triangle. We don't need that at this point if we're going to be talking about this. And our super macro. So we're just looking at these particular areas at this point in time. So we're in this one. We won't have another one till roughly about January 2025. We'll probably be at higher price points by then. So January 25 to about February 25th, the first week of February, followed by the end of this triangle here, which would be somewhere between June 25th and August 1st. So by then, by those times, I would expect Jeff definitely to be in higher numbers. As far as what numbers those would basically be based upon a couple different things. If we were to do a path, it looks something like this. Off of the first move, let's say this was the Elliott wave, the first move we had back in May. Pushed down, this would have ended the second wave. We'd probably move somewhere into this range, about 23, 25. Highly possible to get it earlier, probably somewhere in April, February. Could be much quicker, could be much sooner. But I would expect to be in at least the $30 range, probably by the summertime, let's say June, something in this range. If we were to continue on, we'd get some slight correction, back to at least revisiting the bottom trend line one more time before continuing for the next situation here, which should push us up later on in the year, probably into that $100 to $120 range, probably going into the end of 2026. Into that range. Now, it's possible, doesn't have to work that way, could be a lot sooner, could be a lot faster, but again, as I mentioned, this kind of stuff would happen much sooner once you start to cross above $10. Above $10, you're in double digits, things change, the mentality changes, the sentiment behind the stock changes. It does take more of a more interest is put into it by bigger institutions, obviously being in those ranges. So things start to change from a psychological perspective for a lot of people that are buying, and also a lot of institutions that are buying. But basically all of that says is that we would be in position to continue our move up throughout this trajectory based on these higher lows that we're already seeing. So it would make sense for us to start to move in that direction. Those numbers are not out of reach anymore. I do think we'll have a viable company in terms of a long-term investment. I know we've been long-term investing so far already, right? But now I think this is a time, if you were able to load up even further, I think it's a good opportunity to do so, to be able to at least recoup your investment, or if anything, get well above those areas to start to put some profits in your pockets. All right, so do keep that in mind. This is basically what I'm seeing on AMC going forward over the next little bit. All right, so that pretty much wraps it up on the video on AMC. We're pretty much in a fantastic spot for the turnaround to finally happen, guys. Do keep a look out for the next couple of weeks. I think it's going to be something to remember on this thing finally. All right, but other than that, guys, do hit the like button, subscribe if you like videos like this. Gets the information out there to anybody that wants to know it. Hopefully we can start to see the upside on this thing. Like, subscribe, comment, share, whatever you got to do on this thing. But I do appreciate your time and actually spending time here with me today. You could be anywhere else in the world, but you're here doing this thing. So look forward to seeing you on the next couple videos. Check out the links in the description. If you're not following me on Twitter, make sure you follow me there. We do a lot of different things, conversations, to keep the conversation going. Also check us out in the Discord. We take plays, opportunities, do some TA, some great people in there, and we can do things like this on a regular basis, making money while we're watching our favorite stocks. All right, link is in the description for that. Like, comment, subscribe. See you on the next video.